Hi, okay, we're ready to get started here. First of all, I wanted to say welcome. This is McGonagle, and I am the founder of MEM Investment Research, and I'm really happy that you could join me today. I look forward to helping you uncover and learn how to read charts. This is a very, very critical skill, and it's something that can really help you bring your trading to the very next level. So let's go ahead and get started. I will begin by giving you a little bit of background as far as who I am. As stated here, I do have over 25 years experience in the investment and financial field. Really growing up, I was not so familiar with the idea of investing in stocks with Wall Street, but I did always have a love of finance and numbers. Right out of college, I had the opportunity to move to New York City, and in a stroke of luck, I encountered someone who helped me secure a job at Goldman Sachs. I was on their fixed income trading floor, and it was super exciting. A lot of commotion, a lot of money being transferred and handled, and just a wonderful place to get a start. I did leave Goldman for a job on what is called the buy side, and I was started out as an assistant portfolio manager. It was with a very, very large insurance company, and it was with their fixed income department, and I did work my way up. I managed over $2 billion in fixed income assets, and it was during my tenure there that I noticed the landscape was quite a bit different from now, and managing so much money, I was getting quite a bit of information, certainly before the average investor or self-directed investor did. It certainly was not illegal. It was just the channels of communication at that time. And certainly since then, the playing field is quite a bit more level. So I think it's over the last 10 years or so, I think it's a really exciting time for individuals to be able to take control, invest your own money, educate yourself, and you will have wonderful opportunities to outperform the markets and grow your assets. And so I did leave the asset management. I moved out to the West Coast with my then new husband, and it was there that I got introduced to equities. I was working with William O'Neill and Company in their institutional research sales division, and it was great opportunity. I was there for 15 years as a vice president, and I worked with many well-known institutional portfolio managers, hedge funds, and it was globally. So it was during that period that I really was able to, through my work at O'Neill, study the markets, study what moves a stock, particularly these big winning stocks. And it was a very exciting time. It's only more recently I started my own investment research firm, MEM Investment Research, and I now produce a weekly as well as a midweek report, a sector strategy monthly, that is still going out to institutional investors, but I've broadened that out to include self-directed individuals. And for me, it's really added a whole new dimension to my work. I'm finding it a lot more rewarding. So, again, I do look forward to sharing my knowledge with you today and potentially going forward. So before we begin, there is a disclaimer. I am not going to read the entire piece, but I did want to focus on the fact that the presentation is for educational purposes only. It's not going to be any recommendations to buy or sell any securities. The other item I was going to mention is we will be answering questions at the end. There'll be ample time. So if you could hold your questions until the end, that would be helpful as well. So let's go ahead. I'm going to review what we will be covering today. And the first item that we will be reviewing is uncovering really what the charts are telling us. So simply put, charts provide you with price history of a given stock and or an index, and it provides you with the volume for a specific time period. But really, in reality, charts are telling you quite a bit more, and that comes into play once you uncover how you can interpret that price and volume, and we will get into that in this presentation. The second item is which time frame of a chart is best, and as you know, charts come in various time frames: intraday, daily, weekly. Each different time frame provides a different insight. So we'll be reviewing the various time frames and then go over which ones for you, depending on your style of investing, that you should pay attention to. The third item is, I talked about bringing these charts to life. We'll review which indicators I've found to be most powerful. In addition to price and volume, it's important to overlay these technical indicators on top of the chart, and so we'll be reviewing these indicators. The next item, I always put this in, is using history to give you guidance, and by that we will be using examples of past stocks, and within that we will be able to go ahead and review these various time frames and which indicators can be and are the most powerful. And if you stick around at the very end, there will be a special offer, so I urge you to stay until the end of this presentation, and then of course we can review questions as well. So let's go ahead and start at the beginning. And the first, why is charting important? Well, the first thing I wanted to review is oftentimes as an investor, whether you're professional or again self-directed, the reality is you may read an article, you can come across perhaps new technology, driverless cars are big now, robotic items, and you might read an article or hear about a particular company, and it might have one of the best new technologies out there, but without having a chart that looks positive, you really are not advised to jump into a given stock. So what I will tell you is throughout my many years of studying charts, there are two common tenets that occur again and again in these charts, and that is that price trend and history repeats itself. So these two beliefs are actually the underpinnings of all technical analysis. Price trends and history repeat itself, and they are very important to keep in mind. So while the story behind a stock or maybe the earnings or sales might be strong, you really need to make sure that the price trend that is occurring in the stock that you're looking at and that the chart looks healthy. So I mentioned to you we were going to review which time period is right, and there's not only one time period that is going to be right. I will urge you to review each time period before entering a trade, but I'm pointing this out because each individual is going to have a different goal within their trading. For instance, of course, intraday trading, those individuals will focus on an intraday chart. Those charts, as you will see, are quite a bit faster moving and would certainly be more suitable for your style. Working with institutional professional money managers, I will tell you the weekly is the charts that they pay attention to. Oftentimes they're in meetings throughout the week and they're not going to be in front of a computer screen. They'll review over the weekend and look at their stocks on a weekly chart. This particular approach is for longer term investing. You'll see in the charts that we'll review that weekly charts will keep you in a stock for a longer period of time. The indicators that you're using are going to be slower moving, but I do myself personally find that weekly chart to be very, very powerful and effective. And then the daily chart could be for a day trader or longer term as well, because a daily chart can be very telling on a specific day. If a stock behaves in a certain way, you can make decisions using that daily chart. It's going to be a little bit more volatile, of course, than weekly, but we will go ahead and see that. And then what key indicators work best? Well, in this particular piece, I will be reviewing various indicators that I've found over the years to be the most useful. And in particular for me, I pay attention to moving averages, relative strength indicators, and then MACD, as well as paying very close attention to volume. And there, of course, are many other indicators you can use, such as Fibonacci or Bollinger Bands. But for today's presentation, I'm going to be sticking to the indicators that I have found over the years to be very useful. They are also very widely used, so by that sense alone, they do tend to have a self-fulfilling aspect to them, and they can be very powerful. So let's go ahead and review the 5 key ways that you as an individual can use a chart. And the first way is it can help you define a trend. You want to make sure before you enter into a particular trade and you are looking to go long, you want to make sure your stock is in an uptrend. And of course, if it turns and reverses to a downtrend, of course you would like to exit. So you can define a trend using your chart. Also, you can use the chart to help you really pinpoint when to buy and when to sell, and we will get into that. The third key way to use a chart is to determine the broader market conditions. As always, you want to make sure that the broader markets are in a confirmed uptrend before you enter a particular trade. If the markets are correcting or potentially going into a bear phase, you don't want to be in the markets, but you can use a chart to really help determine whether the broader markets are healthy. Fourth way is to see if your stock is finding support, and that's where we'll get into using moving averages. A stock is not going to go straight up, of course, so there will be periods when a stock pulls back, but you want to make sure that it does not break. So that is another key way to use a chart. And then I talked about trends reversing. So you can use your charts to spot, is your uptrend, has it reversed? Or in the case of a downtrend, has that downtrend reversed and is the stock turning more positive? So let's go ahead, and what I'm going to do is start out by showing you a naked chart, for lack of a better word, and as we get into marked up charts, I will then go ahead and review the various technical overlays. So in this particular instance, what you're looking at here is a monthly chart. So each of these bars represents 1 month of trading activity, and you can see and of course this is Apple, so it's had a great lengthy uptrend over its period, but many institutional managers also look at monthly charts to help them because you really can get a long, it's kind of a lumbering trend. But this is an Apple on the monthly. Now we are looking at Apple on a weekly chart. So each of these bars is a week's worth of activity. So now you're starting to get hopefully a sense that with a weekly chart as opposed to the monthly, you're getting a bit more, I would say, static. You're looking at this 2015 period, it's quite a bit more volatile and not quite as smoothed out as your monthly chart. The weekly, pardon me, this is your daily chart of same company, Apple, and again it's getting even more volatile. You're seeing a lot more in the way of the price action. Each bar represents 1 day of trading activity. You can see these gaps. Oftentimes your gaps up or down can be earnings related, but more importantly, you can hopefully get a sense that the action is a lot more volatile as we drill down into smaller time periods. And then finally, this is a 15-minute chart on Apple, so each bar represents 15 minutes. So if you are an intraday or a day trader, you certainly would have to act quite a bit more quickly to take advantage of these moves, because you can see, again, quite a bit more volatility as we drill down into these shorter time periods. So let's go ahead, and what I've done here is that very first chart that we were looking at. This is the monthly chart of Apple. Again, each bar representing 1 month of activity. So let's look at some of the overlays that I have put over the prior to this. It was just price and volume. So the moving average, and if you'll forgive me, I will get us back to where we were. This again is the monthly. So the moving average is what I'd like to point out to you first. On a monthly, a lot of you might not use a monthly, but you can see that it would keep you in a stock longer. This is a 6-month moving average that has been overlaid onto this chart. So let's take a look up here. This is what is called RSI. It's your relative strength indicator. And then in the lower portion is MACD, your moving average divergence. But I'm going to go ahead, before explaining precisely what they are, is go ahead to the weekly chart. And this, I think, just for general purposes, for those of you here today, reviewing a weekly chart might be a bit more useful as far as explaining what these other indicators are that I've overlaid. So let's go ahead and start with your RSI. And in this particular case, I have used stock charts. And many of you use other different trading platforms and charting services, and they will all, from what I've seen, most of them at least, will have some variation of this RSI. So just to give you an idea of exactly what this indicator is, it's intended to chart the current as well as the historical strength or weakness of a particular stock. So what the RSI does is it takes the closing prices of a recent trading period, and the most common period is 14. So you can see the number 14 up here. Because we're looking at a weekly chart, it is taking the last 14 weeks of closing price, and it divides it by 14. And in essence, you then get this smoothed out line that provides you with a sense of whether the stock is exhibiting strength or not. So what you'll need to pay attention to with the RSI is this middle line. This is called your center line. So if your smoothed out line goes above that center line, that is indicating to you that the stock is showing strength. So ideally, you do want this RSI to be above this net zero line. So in this particular case, as we are beginning, what you're looking at in the very beginning of this is the last part of 2014, and the stock indeed was in a bit of an uptrend. As we move forward with this RSI, you'll see that it actually goes up above the 70 mark. And once the RSI line gets up above here, the stock is in a period of what's called overbought. So what that means is that there is an expectation that at some point this uptrend, once it gets into that overbought period, my computer is being ever so sensitive today, I apologize, but once it gets up above that line, you will at some point expect the stock to pull back. And indeed it did toward the end of that 2015 period. The stock did pull back. And so if it goes below 30, and I'm going to take you over to here, this period, the stock at this point in time is now oversold. And so from that point, you would expect the stock to at some point reverse up. So there's your RSI. We will see other examples of that, but that's a general overview of what the RSI is and how to use it. So let's move down the chart. This red line, I talked to you about moving averages. And so because we are looking at a weekly, the most common moving average to use is your 10-week, which translates to a 50-day, and then there is a blue line that is 40 weeks or 200 days. So let me explain to you what a moving average is. In essence, when you are looking at a moving average, it's essentially smoothing out the price action of your stock. And so what you are looking at is, as a for instance, let's take a look at this 10-week moving average. And there are two things that you will want to pay attention to. What direction is your moving average trading? So in this instance, your 50-day is in an uptrend. And you want to look at the stock price relative to that moving average. So ideally, you want the stock to be above an upward trending 50-day moving average. And that's going to be where you are once you enter a trade that is broken above that 50-day. You want that ideally uptrend to continue, and we can take a look at this period as a prime example of a stock that in this case has broken up through that 50-day moving average and it's uptrending. And as long as that moving average remains in an uptrend and your stock continues to find support at that moving average, you can quite easily be comfortable staying in that stock. Now, of course, you want to match it with an RSI that is showing strength. And then let's go ahead and take a look at the MACD that is down at the very bottom. And this is called a moving average convergence divergence oscillator. That's a mouthful. But the thing that you want to pay attention to here is this black line here is your MACD line, and the red is your moving average line. This oscillator also has a net neutral in the center, and you want with this particular oscillator two things to occur. One is the black MACD line crossing up through the RSI, and you want it also to be in the upper half of this oscillator range. So these two items put together are very, very positive. So let's take a look at what exactly you're looking at here with the MACD turning positive. And then if you're able to draw your eye up and put it together with a stock that's breaking up through a key moving average on volume. I did mention a little bit, but I do want to stress how critical volume is. So now we have two positive technical indicators that are indicating that this stock is indeed turning positive. Your RSI is turning up. So we have three and with the volume 4 indications that this stock is going into and entering an uptrend. And I'd like to actually point out a fifth item that I did not mark up, but for those of you that are familiar with, for instance, Bill O'Neill or any other tutorials out there that teach you to look at and make sure that ideally if your stock is coming out of a base, and that would be a base is described as a stock that attempts to hit a high and it does not. It either fails, it can trend sideways. There are many different types of bases. In this case, the stock falls back to its upward trending 200-day moving average, and then it breaks out to a new high. So in essence, we have 5 indicators that are telling us that Apple is entering an uptrend. And hopefully you are able to see that. Now let's move further down this chart, and I talked to you about the RSI. Now the RSI here is trending down. However, it can do this and it can stay positive for quite some period of time. You can see that it's bouncing around. Where it gets ominous is when the RSI breaks this net neutral and then turns negative. And let's go ahead and put this together with some of the other indicators that we just reviewed. So your 50-day, I talked about you're wanting to see it in an uptrend. That's very healthy. So during this period, your 50-day moving average is leveling off. Your stock is starting to lose steam, so to speak. Doesn't mean you have to sell it quite yet, but let's go ahead and look here. The stock breaks below that 50-day moving average on pretty big volume. Once it breaks that 200-day, for sure, you, in most cases, do not want to be in that stock. It has now broken the longer-term key support. So right now we have two technical indicators that are telling us it's time to exit this trade. If we put it together with your MACD, we got the negative crossover way back here that was a warning sign that things were not going particularly well with the stock. And sure enough, it does then trend negative. So let's take you down further. RSI is now waffling in this negative area. It's not going to be a stock that you want to be involved in, but more importantly, and hopefully you will see this so that when you're looking at your stocks, you'll know not when a stock is not healthy, and that is now your moving average, your 50-day is very, very clearly in a downtrend. That's not healthy, and it has subsequently pulled your 200-day also in a downtrend. And what happens during this period is the stock will have these attempts at rallying, and these key moving averages, instead of being support, similar to when it's in an uptrend, now it becomes resistance. And as that trends down, you are not making any real headway. The other item with this moving average, hopefully I'm not throwing too much out there, but we'll review some other charts as well. When your shorter term moving average crosses your longer term moving average, that is called a death cross. I know it's a horrible sounding name, but it is indicating and it can be very powerful as an indicator that your uptrend has been reversed. So that's yet another indication that things are not going well. So this is your weekly chart. What we will go ahead now and do is take a look at those very same indicators and looking at a daily chart. And I mentioned this to you earlier, suddenly things are quite a bit more volatile. You're seeing a lot more in the way of gaps. And so what I've done and what you can do with your daily charts is add in one more extra moving average. It's going to be critical as far as helping you make decisions when looking at daily charts. So again, each bar here represents 1 day of trading activity with the volume that is associated with that directly below that. So the additional moving average that I have found to be very, very useful in daily charts is a 10-day moving average. And so what happens is your 10-day moving average on a daily now becomes or can be associated with the 50-day on your weekly. It's now going to be acting as your eyes, your indication whether the stock is in an uptrend or not. So in this particular case, I'm taking you, this is March of this year. I talked to you about a death cross. There is also a positive called a golden cross, and that's when your shorter term moving average crosses above the next lengthy moving average. So for instance, this is your 10-day crossing up through the 50-day. The red line is your 50-day moving average. And you can see if you were inclined to take shorter trades, This particular trade is the beginning of March, and it lasted about actually into the mid-April, so about 6 weeks. But so here we have the stock breaking up above that 10-day moving average as well as 50 on big volume. Your RSI has turned positive, as has your MACD. So you're given 3 to 4 signals with the volume that this stock is now entering an uptrend. And as we can see here, I talked about the uptrend lasting 6 weeks. Here are your indicators that the uptrend has reversed and is over. Your RSI is trending now below this net neutral into negative territory. Your stock has broken down through what was once acting as support and in an uptrend has now broken below that. And take a look at the volume. That's significant. And then thirdly, of course, is the fact that your MACD has crossed over in a negative fashion. So now it's time to exit the stock. And then sure enough, we do get that gap down in price. So what's happening since then? Let's take a look. Your RSI gets sold. So at some point you expect an uptrend. However, I would tell you that this uptrend here, of course hindsight is 20/20, but this occurs again and again in charts. You can see this uptrend and it looks interesting. It's broken up through the 10, but the reality is your longer term key moving average is still in a downtrend. And as long as that occurs, you will find resistance. It will not break above a downward trending longer term moving average. However, at some point it will. So the point here is that golden cross, the short-term moving average crossing above its next longer moving average. And what this tends to do is initially stabilize that moving average and then move up. As a matter of fact, I'm part of the top advisors corner with stock charts, and I just wrote an article that talks about identifying downtrend reversals. And so if you did want to read a bit more about it, you can go to that website and read that blog. But you know, again, over many years of reading charts, you will see the same occurrences going on again and again. So let's go ahead and follow this on a daily, follow the how this chart performs. So again, now your 10 days in an uptrend and it's acting as support. It's healthy. You know, you can see that this year in particular for Apple has been very volatile for this stock, but in essence, you now are back in an uptrend. But hopefully you're able to see that depending on your appetite for trading, you can use, again, a daily, a weekly. We are going to go ahead and get into the intraday, which is going to be even more volatile. But depending on your style, a weekly or a monthly can really keep you in for a lengthier period of time, while daily, and now we'll go into the intraday, is going to be a bit more choppy. Not always, but for this particular stock, of course. So now we're looking at a 15-minute chart. The same overlays are here. In this particular case, I have a exponential moving average, and I did not mention that earlier, but exponential moving average is a faster moving average. The other 3 charts I was using what's called a simple moving average, but the exponential is faster. So I have a 5 and a 20-day moving average. So each bar represents 15 minutes. And again, the same principles apply. You have the shorter term crossing up through the longer term, your RSI turning positive, as well as your MACD. So for this particular period, you could have captured this move. Then throughout the next several days, the stock is not very active, but you can see here again, using these indicators that a downtrend has started. You have your death cross and you have your negative MACD crossover. So I'm pointing out to you that these very same indicators can be used on various different time periods and different charts. But let's go ahead and look at a different stock. So in this particular case, this is Barrick Gold. The ticker symbol is ABX, and we are looking here at a weekly, and a lot of the very same principles that I just mentioned are going to apply here. So for this particular time period, I'm taking you back. This is the very end of 2015, and again, your RSI is turning negative. You have what's called the death cross. Your key moving averages are very much in a downtrend, not healthy. Any kind of rally attempts fail. And so what I'm trying to point out to you here is something I showed you earlier. It is a reversal of that downtrend. So let's take a look at what we are looking for. And this actually, I'm trying to think if I mentioned to you that my research company puts out a weekly newsletter, and we were pointing out in the beginning of this year that gold stocks had turned, and it was certainly obvious in sight of all of the other groups and stocks that were getting hit. As many of you may recall, the beginning of this year in January, the broader markets just got walloped, but gold was withstanding that, and it turned, and here's what brought that to our attention. So again, unlike other stocks, gold was on an uptrend. So the stock, this is again a weekly chart. It broke up above the 50-day. Then it broke up above the 200-day on volume. You had that golden cross with the 50 crossing up through the 200. Your RSI came out of this negative into a positive period, and then likewise your MACD moved into a positive area here. So you had three indicators, and it did occur on high volume. So this is yet another example of how you can spot a reversal of a downtrend, and as many of you know, gold did go on to have a very nice 8-month rally from there. So this is the very same chart, and so what I did want to point out to you from here is again, the stock did very well for about 8 months, but let's take a look at what would show you that that uptrend has indeed reversed. So in this particular instance, we have the RSI breaking down through that net neutral, but more importantly, your stock has broken below this 50-day moving average, or 10-week. We're looking at a weekly chart, and it is happening on significant volume. Your MACD line has crossed down through this red indicator, and so now we have three signals that the uptrend is potentially reversing. And sure enough, once you see what was at one time your very healthy uptrend starting to roll over, that's indicating that it's time to exit that trade and that particular stock. So of course the jury is out now, but gold certainly is not very healthy at this point in time. So indeed, had you heeded that, you would be well served. Looking again at ABX, we can take a look at this 15-minute chart. And again, you can see, because we've drilled down to a shorter period of time, it's really, really volatile. So looking at when this is taking us back to this break, and on a 15-minute chart, it looks quite a bit more ominous. But again, using those key moving averages, you can see that there is a very clear-cut downtrend. So this is taking us from July 21st to July 22nd. It did have a one-day break which then was reversed. So depending again on your appetite for trading, these key indicators are all going to be very, very useful regardless of which chart time period you're using. So one other thing, and I did touch upon this with Apple, in addition to using moving averages and RSI and MACD, you can also identify stocks coming out of bases. So this particular stock is Huntington Ingalls, HII. You're looking at a weekly chart, and what I did want to point out to you is something that I mentioned to you before, where the stock attempts to hit a near-term high and it fails. And in this particular instance, what we are looking at, because it's a weekly, this is your 10-week or 50-day moving average, and the red line is your longer 200-day moving average. So this particular case, the stock did have that golden cross, so it is indicating flashing positively. Your key shorter-term 50-day moving average is in an uptrend, that's positive, and your longer-term key moving average has leveled off. So in this particular case, the stock does pull back to that longer-term moving average, and it breaks out. The stock did go on to do well for about a 6-month period, but just pointing out to you that when you can identify stocks coming out of bases, that can be a very, very powerful chart pattern to pay attention to. Now, this next stock that we're looking at is a daily chart. It's NetTees, NTES. So because it's a daily chart, of course, again, each bar is representing one day. So what I wanted to point out to you here is this particular stock, and this is another name that made it onto our buy list in the beginning of May because of what we saw occurring. Tech stocks had a very tough with all other stocks in the beginning of the year, but this particular company was a little later to the party, if you will. But what we identified in this period was, again, we are looking at a daily, so your green line is your 10-day, and that is the first indicator. As that crossed up through the longer term key moving averages, it got very, very interesting. The RSI was trending, started to turn positive, as did the MACD. So the fourth item here is the stock emerged out of a base. And if you can see the volume here as it is breaking out, hitting new highs, the volume is really quite a bit higher than it has been. So if you can study these types of chart patterns and train your eye to identify these, again, different indicators, stock coming out of a base, it's really, really going to help you outperform the markets. So what I wanted to point out here again is, what does it look like when a stock has been in an uptrend and it reverses? And this is Sonic Corp. We're looking at a daily chart, and this stock has been, again, another little bit of a volatile stock, but it will show what I wanted to show you, and that is taking us back again to the beginning of this year. And I'm looking at we're looking at a daily. The green line is your 10-day. So your 10-day crosses up. This is your golden cross. You can combine it with your RSI trending up and your MACD. So now the stock is interesting. It's identifying an uptrend, but for this particular stock, that uptrend was short-lived. It was about a 4 to 5 week uptrend because again, I mentioned to you, once it gets up into this overbought, you can expect the stock to pull back. But in this case, the stock did more than pull back. It broke this shorter term key moving average, your 10-day, and which eventually did go on to experience that death cross. But if you were paying attention to your other indicators, you would have ideally gotten out of this stock sooner, but eventually what I'm hoping to point out to you is the death cross, your RSI is negative, your MACD is heading south. This is not a stock that you want to hang on to, because again, your shorter term uptrend has now reversed. So those are some examples. Hopefully I was able to provide you with insight on what to, again, train your eye for. So let's review, how can you read charts properly? And the first item I mentioned is you want to find indicators that speak to you. So today you can see that I had 3 or 4 that I have found to be very, very useful over the years. You may find others that work, that are appealing to you either logically or visually. So that is the first thing that you are going to want to do. Again, the ones that I've used today are widely used, and I have found them to be very, very useful over the many years. The second thing is you want to use the time frame that's best for your style. So I did review that with you, that the monthly is if you are a long-term trader, stick with that, and a weekly as well. But if you are more inclined to trade more actively, then of course the daily and then the intraday are the chart time frames that you're going to want to go ahead and key in on. Use multiple signals, and I did point that out to you, because when you are looking at a stock to enter a particular trade, the more technical indicators that are positive and are pointing you toward a stock, the better, because then that will help you get into a stock where the odds are more in your favor. More indicators, the better. And then the last thing I pointed out here is for the broader market guide, you want to use the 50 and the 200-day moving average. And by that I mean using, looking at the S&P, the NASDAQ, or the Dow. These are the 2 key moving averages that you'll want to pay attention to. The oscillators, the other oscillators I've reviewed are not as useful, but you want to make sure that those 2 key moving averages are in an uptrend, that the index that you are looking at are finding support at an upward trending key moving average. And my weekly newsletter is all about the current market conditions, and we show a marked up chart each week of the S&P, pointing out why we feel the broader markets are healthy or not, where we expect the indexes to find support. So it's really should be a critical component of your work, because you want to make sure that the broader markets are healthy before you put money to work. So let's go ahead and review some conclusions. As you hopefully have noticed, knowing how to read a chart is really a critical and important tool when analyzing your stocks. Again, you might hear about the most amazing company out there. It might have strong fundamentals, but if the chart isn't positive or healthy, you do not want to enter that trade. Taking the time. Today is hopefully just one step in many educational tutorials that you are reviewing. Reading charts takes quite a bit of time. I remember years and years ago, the very first chart that I reviewed was absolutely confusing, but over time, as you again and again review charts, it's really going to be important to your work. Lastly, know yourself. If you're devoted and you do have the time, do the work. It will really increase your odds and help your returns. If you don't have a lot of time that you can put to work, I advise that you subscribe to a newsletter from a seasoned pro. Of course, the newsletter that I put out, we identify stocks, we provide marked up charts identifying why we like that stock, and that's yet another way that you can educate yourself and train yourself by reviewing others that have been doing it for a lot of years. Now lastly, I mentioned that at the end we have a very, very special offer, and in this particular case this is an educational tutorial, and what you will be reviewing with this is the 6 characteristics of a winning stock. And what this is going to be teaching you is what key items are necessary. Now, when I talk about a winning stock, it is stocks that go up 100%, in some cases 1,000%. These are big winners. And over the years, in studying charts and studying the markets, there are 6 key components that are necessary in these big winning stocks. Not every stock has to have every characteristic, but there is one characteristic that every big winning stock needs to have. And so this is normally close to $300. And today, if you are inclined, there is a link and you can review this for only $39. It is really quite powerful. It is filled with examples, and it's going to be yet another way to tune you in to what to look for in a stock that's poised to really take off. So at this time, I would love to take any questions that anyone might have, and let me see how I can do that. I think if you can bear with me, I am going to see how I can view your questions, and I apologize because here we are, and I thank you for your patience. So let's go ahead, and I do have a couple of questions here. Someone was mentioning that they cannot get volume on this. Okay, I see what you're saying, and so they can't. Yes, you will receive a recording of this. Paul had a question of whether it is a 40 or 50-day moving average. The 50-day is what I use, and the 40 that you may be referencing is on a weekly, and that 40 weeks is your 200-day, so that may be the confusion there. So you get the slides. Yes, Sam, you will receive all of that when you get your copy of this recording. And there is a question, do the same indicators work for Forex? And I do not trade Forex actively, but yes, from my understanding, you can use that. And then also the offer includes video. Yes, it is a video. It is an hour. It is, again, filled with slides and lots of examples, as well as audio. And then, James, what time frame do you use for broad market indications? I did touch on that at the end. That is a 50 and a 200-day, or a 10-week, or a 40-week, and those are really going to help you with your broader markets. What is the win percent of my recommendations? Well, I can tell you that my track record is very good. I don't have a percent number in mind, but currently, as of, for instance, there are, we're up to about 16 stocks. It ebbs and flows with the market. And so each week I identify whether they're in a buy zone or not. And within that, oh my gosh, I don't have a percent. I would be, but it's right now the aggregate return of those current names is 17%. Oftentimes we'll have stocks that will have big moves. So I apologize. I don't have a percent number. And then triple ETF, Sam, that is a very good question. Yes, you can, and it's, you do need quite a bit of nerve to trade those, but your triple ETFs, yes, you can use those very same indicators. And you'll see, if you look at a ETF, whether it's triple or not, that each stock or ETF, etc., has its own personality. It has its own moving averages that it tends to pay attention to. So let's see. Do you track the performance of a model portfolio? Well, in I'm not quite sure what that question. Oh, a membership for a year. Gosh, that's a great question. A yearly membership is $9.97. However, I believe we may be sending to you a promotional membership where you can get a 4-week trial for $7. And I apologize for not including that with this, but we will go ahead and send that out to you for those that are interested. I would urge you to take advantage of that. We're in a really exciting period for the markets right now. And I don't see any more questions. I will stay here for another couple of minutes, but I do want to thank everyone that took the time today. Hopefully you found this educational. I do see one question here. JQ, you will get a video emailed to you. Oh, I'm sorry, you mean the offer. That is via the internet as well, not hard copy. John, the offer link is not working. I will go ahead and reach out. Gosh, if you want to go ahead and I did want to urge people also to go to my website, or you can go to Pro Trader Strategies. They will provide you with that link. I apologize. My website is MEM Investment Research for those that want to find out more. But John, we will try and get you that link. Oh, Sam. I'm sure that people do that now already, so I don't see why that would be a problem, Sam.